Let's take a deeper dive into where the major indices could go from here. On the heels of this week's Fed pause, our next guest says history would suggest markets will keep rising, despite a few more bullish takes recently, including one this morning from Bank of America's Michael Hartnett, who thinks this feels more like a big rally before a collapse rather than a brand new bull market. Joining us here at Post 9, Bespoke Investment Group co-founder Paul Hickey. Paul, great to see you.
Good to be here.
So what does history tell us?
So I think if you look back, we can look at back from the market perspective or from an economy-wide perspective. So let's take inflation first. CPI, we're less than a year from the peak of inflation. We've dropped 5 percentage points in the year over year from the peak reading. You look back 5 other periods in the post-World War period, market was higher a year later every time. The people on the floor of the New York Stock Exchange don't think Paul Volcker is a saint for nothing. There's a reason. Low inflation is good for markets, and we're seeing that reflected in what's going on. Just from a market perspective, so we can look at it a number of different ways, but just this past Monday, we hit a 52-week high in the S&P 500. Hadn't done that before in over a year. You look back every other time that's happened, about 16 times. The only time we weren't higher a year later was in 1947, I believe. Every other time since then, we've been positive. And what you do see in the short term, though, you tend to see the market, pause and refresh. I mean, we've had 10 straight days where the S&P has traded 2 or more standard deviations above its 50-day moving average. That is what we consider extreme short-term overbought. But when you look back historically, these periods tend to be, for the longer term, very good opportunities for the market. And, you just got to admit it, the bull market is back here.
You have to admit it. You have to admit it, David.
We're not the Mets, okay? I mean, commiserating, this market is not the Mets, all right? So, and it's been so painful to watch the Mets. At least we get to watch the market going higher.
I've been focused much more on the market than the Mets of late, but we're not done yet. And I would say most of these traders probably don't remember who Paul Volcker is. But, when again, this relationship between sort of inflation abating and the market.
Right.
Do we have a typical advance during that period of time?
So in those periods when the market was down, when you had inflation pull back, it was a median return of 18%, from the high single digits to up to 30%. What's really interesting, too, is GDP was down the first half of last year, 2 quarters in a row. You look back historically again, the median gain in the S&P 500 1 year after back-to-back quarters of negative GDP is over 30%. So what we've done in the last year has been impressive in this year, but I mean, some could say it's even been below average.